Okay, so I just wanted to have the disclaimer there before we get started without reading it through. So everything that we share here is for educational purposes. For anybody that's maybe watching it that's not a coaching student, please make sure you get mentored, understand the forex, understand the risks, understand what to do, and always paper trade, paper trade, paper trade. And if you can, paper trade again until you get it good, and always use risk capital. Okay. So with that being said, let's go ahead and begin. I'm not going to waste any more time on that. So if you guys can hear me, you guys can see my screen. You guys should be seeing the Forex Factory calendar screen here. I'm going to go through the news for this week so you guys can jot down the information and jot down on your notes as we get ready to trade the financial market for this week. It's a new week. This is the week of Sunday, January 19th. Starting off on Sunday, nothing. On Monday, we have the monetary policy meetings in Asian session Monday night. But other than that, during London session, I do not expect to see anything showstopper from a London perspective in terms of any volatile news that would move the market in a very radical or irrational, erratic or irrational type of way. So that is Monday. And then moving on to Tuesday, we do have some news during London session. We have the economic sentiment, but that will probably have small impact on euro. Expect a normal average daily range for each pair's typical London breakout, London fake out, stop hunt situations that happens on Tuesday. And then going on to London, New York session at 8:30, we have Canada's CPI data, right? So right now, Canada is experiencing around 5%. So 5% inflation, and they're expecting it to go down to about 4.8. So we'll see how that affects the Canada pair. We'll take a look technically on the chart of what's going on for this week in terms of Canada, what's been going on with Canada. So if you're trading dollar CAD, Euro CAD, pound CAD, CAD chef, CAD yen, pound CAD, things like that, you may want to be aware of some of the things that's going to be going on Tuesday at 8:30 a.m. Eastern time. This is when you want to trade news. Now, as everyone understands that, everyone in my coaching students in my academy understand that when we trade news, we are not trying to predict news. We're not Nostradamus. We do not have a crystal ball. We do not try to predict what happens to news and how we are going to trade the news. We're not going to expect it to go up, and therefore we're going to do a buy, and we're not going to expect it to go down to expect it to sell. What we are going to do is trade the aftermath of the prediction of the unpredictable, right? We are going to trade the aftermath. The way we use high volatile news, this is very, very important for those who always thinking and try to trade news and getting whipped out because you're trying to trade news and you don't have a really good fundamental technical know-how on how to trade the news specifically. Coaching students, we get a little bit more hands-on in terms specific on if you wanted to trade the news, this is how you would trade it, because it's not the typical buy and sell, waiting for tops and bottoms type of deal from a market structure standpoint, because you're just trading all the way down to about a 5 or 15 minute candlestick. So it's very, very difficult, and it's for only advanced. But typically what you want to do is use news to understand when do you expect movements in a pair. That's it. That's it. That is all you need to know when it comes to fundamental news, instead of trying to predict if it's going to go up and down and trying to catch this, and you're going to get, most likely an unfavorable result. So what you want to do is just typically use news to know exactly when we expect movements or volume or volatility, right, in a specific pair. And in this case, it's going to be on Tuesday March 22nd at 8:30 a.m. Eastern time for Canada, right? If someone was to tell me, hey, Leonard, hey, when's the best time should I trade CAD? CAD's my favorite pair. I like CAD. I'm in several CAD pairs. When's the best time to trade it? I would say, you know what? The best time to probably think about trading it will be around Tuesday, 8:30 a.m. Wow, that's pretty specific. How do you know it's going to be Tuesday, 8:30 a.m.? Why not Monday, Wednesday, Thursday? Why not London session? How do you know Tuesday would and 8:30 a.m. Eastern time would be a good time to look at CAD? That's pretty darn good. No, it's not as simple. It's just go to Forex Factory and really understand how you trade fundamentals. Okay. Okay. So should I get ready to buy or sell? No. You're not gonna know exactly what's going to happen because it's high volatile news. So you're not trying to predict if it's going to go buy and sell. You're just trying to know exactly when you expect to get a movement in that pair so that you can get ready to trade. And if you're already in a trade, you may want to get ready to get out of a trade. That's all. That's all you're trying to do when it comes to news. Okay. Hope that makes sense. All right. So other than that, that rounds off for Tuesday. Moved on to Wednesday. Well, Tuesday night, Asian session, nothing. And then moving on to London session, we have pound, British pound, UK, right? Their CPI, inflation rate. Right now, they're experiencing a 10.1 inflation rate, high, right? That's pretty high. And they're expecting it to go down to about 9.9. So again, if you're looking to trade anything regarding pound, or you're looking for a great trade volatility to get, a good 80 to 100, maybe a close to 120% of its ADR, tune in on Wednesday, London session, if you're in the US, at 3 a.m. Eastern time. And if you're in UK, I think with the 1 hour, back, we're looking at, still 8 o'clock their time, right? So 8 o'clock in UK, that'd be a good time for them to consider looking and jumping into a pound pair, whether it's pound dollar, pound yen, euro pound, pound CAD, pound odd, whatever that case may be, anything with pound. That's the day you want to tune in on Wednesday at 3 a.m. or 8 a.m. UK time. And that's it. That's exactly how you want to use it. Okay. Other than that, we're expecting nothing much from a US dollar perspective for all of the typical New York morning. Okay. And this is a special day. And what happened is normally by New York opening, pairs for dollars will start to range. Indices will start to range, right? This is kind of like the calm before the storm, right? And what storm? This storm at 2 p.m. Eastern time. I think that'd be around, well, we're 5 hours now behind UK. So that would typically probably be like around 4 o'clock, right? Their time. Yeah. No, it'd be more like 2 o'clock our time, would be more like what? 7 o'clock, maybe 7 o'clock. Okay, so it'd be more like 7 o'clock. Sorry, in the evening. We can expect some heavy volatility on Wednesday at 2 p.m. Eastern time on US dollar. We have the FOMC rate decision. We are currently at 4.7% or 0.75 interest rate, and we expect it to go to up 25 basis points. Okay. Now, fundamentally, if it goes up, we expect it strengthen the dollar, only because it is a key interest rate news. CPI, PPI, it's kind of hard to differentiate what's going to be happening or what's expected from a currency perspective, other than, well, if you get high CPI data, well, that should be good for the currency. In this particular case, same thing, but we're not going to trade the expectation that says, hey, if 5% happens, we're going to go ahead and buy. Nope, that's not what you're going to do. In fact, you're just going to sit there and watch it And if you do trade it, then you got to have a specific technique. But other than that, we just know you want to stay out of the market by 2 p.m. And if you're in a trade on dollar or any of the dollar crosses, then you are going to want to look to get out of it, right? Or get ready to tighten up your stop loss. Okay, so is the big news that is going to be happening, and this will set the course for the dollar for the rest of the month and well into April as well, as we get ready to the next FOMC rate decision in May. Okay, so along with that rate decision, let's look at the Chicago Board Exchange in terms of its expectations, and right now it's still looking heavy on a high probability of 62% that we will go up 25 basis point versus a 38%. Okay, so as long as we're coming at 25 basis points and it's a 62% probability on this Wednesday, then we can expect some strength in the dollar. And then of course that would be indices and gold and everything else to go down, right? Typically, in a typical basic fundamental understanding, what we're going to do is look at the chart to see if we're seeing any of those development technically. Okay, so we got to look at it technical versus what we understand is fundamental, and see if what we see technically on the chart is going to get ready to play out. And if it does, what should we do look for on Wednesday if this does play out with dollar strength and indices weakness, because we need to trade the aftermath of it, right? So once the initial push or drop happens, then we're going to come in on the following evening or London or New York, and now we get ready to continue to trade it. In other words, if the dollar come in strong, then we're looking for an uptrend in terms of dollar CAD. We're looking for dollar Swiss francs, dollar yen, because those correlated pairs, we should be looking for an uptrend. An inverse correlated pair, because base currency would be the dollar, the core currency would be the dollar, like euro dollar, pound dollar, R dollar, NCD dollar, then we'd be looking to trade down. In other words, be looking for shorts and sell trades for a bearish movement. Okay, so that is what I mean in terms of looking to trade the aftermath, in terms of what we are looking for in terms of our bias and setup. Okay, coming back to the fundamental news, that will finish out the rest of Wednesday. Then we get into London session Thursday night. Obviously, pairs will be moving for the dollar because London will start to react to what the FOMC rate decision. So in other words, if the dollar is strong, then we would expect London to continue to strengthen the dollar, right? Or they can do a small rebalance in terms of pullback, depending on how much of the gap or imbalance that may happen. So in terms of how much strength movement that happened in New York. So the folks in New York would pass on the Asian, and then Asian would pass on the dollar to London, pass on the game plan in terms of market makers and institutional traders in terms of possibly fading the dollar strength or doing a little bit of pullback correction, because it just can't keep going on and on and on. I mean, if it's an uptrend, it can't keep going on and on and uptrend. It has to pull back, it has to manipulate, it has to rebalance, right? And then before it continues on. Okay, so that's very, very important how the market maker works. Because if you think because it's an uptrend, for example, dollar yen, because it was a strength in the dollar at 2 p.m., and then you come in at Asia session, and then you get ready to push buy in London session because that's all you're looking for. True, you are looking for a buy, but you understand there has to be pullback, there has to be mitigation, there has to be price rebalance to either covered order blocks, to other fill in balances, or go in and manipulate certain traders who are all they're doing is coming in and hitting the buy button or looking for a breakout to the buy, for example, and it actually need a pullback. And it may be a pullback to the 50%, or 618 level, or whatever the case may be, before it continues on. That could typically happen as an example. If you do not understand that, please get some coaching, right? Sign up to our academy. We'll walk you through that. Okay, so Thursday, we do have some more rate decisions, which is awesome, but it's not for US. So at 4:30 a.m. Eastern time, if you're looking to switch French or you want to trade Swiss French, then this is the day you want to trade it. It's currently at 1%. They're looking to raise a 50 basis point on Swiss French at 4:30 at Thursday. Make sure you make a note of it. So Swiss French, either you get into a trade after the news release, or you stay out of it until after the news release. That would be London session Thursday morning at 4:30. Okay. Then right after that, this is a good time because this is going to be around New York session, comes in at 7 a.m., right? New York typically in terms of Forex starts at 7 a.m. and Eastern time, and they are looking to raise interest rate on British pound, right? So British pound will have a significant impact. This will go from a 4%, 25 basis point, 2.25 basis point, and this will happen exactly at 8 a.m. Eastern time on Thursday, okay? So I hope that makes sense with 3 back-to-back rate decision. Just to recap, so we got USD on Wednesday, 2 p.m. Eastern time, London session, 4:30, Swiss French, and then at 8 a.m. around New York opening around with the crossover with London at 8 a.m. for pound, back-to-back, US, Swiss French, and pound. And then we will finish off the rest of the New York session. Expect some little bit, it's going to be very high volatility, right, on Wednesday. So you got some home sales to kind of talk about, hopefully reduction of home sales from 670 to 650,000. And then we got natural gas and things like that. So that's about it. That's going to be the rest of New York session. Heavy volatility on Wednesday. And then we're going to go into Asian session. We got some core CPI that will have a significant impact on yen. So look for yen movements, any yen pairs crosses right at Asian session. We got odd, and then we got, GPP, but more JPY. Okay, so that'll be nothing huge like a rate decision, but it's just going to be moving. It'll move its full range between 50 to 55 to 60 pips in the Asian range. Okay. And then we're going to be wrapping up Friday. That's it. Friday. We'll go into London session. And in London session, look like we got a lot of news happening in London session. Look at this. Just a lot of news. Nothing crazy in terms of CPI or rate decision, but just a lot of economic news in terms of PMIs and German PMI, German flash PMIs. And then you got pound PMIs and flash service PMI, manufacturing PMI, right? So that means right at 3 o'clock, expect to see a lot of breakout movements, pullback, stop hunts, typical movements, and then back down, okay? Coming out of the Asian range. Very, very important. So you're going to see a lot of either a breakout, you're going to see some stop hunts, you're going to see some pullbacks, but other than that, you will see a lot of movement volatility in London session. And I can tell you most of that, from my experience, will probably be dead by the time Friday. So by the time New York session come out. And that's because it's basically out of gas, right? So if a pair has, like, for instance, pound dollar has like maybe 110 average daily range pips, you can expect to see a good 75-80% of that pip range pretty much done by New York. And if that's the case, say for instance, if we get a pound dollar go down by, because it's, just say this is Asian range, and then we have a breakout, and then we have a stop hunt back to the downside, for instance, hypothetically, if the dollar is strong and pound's weak, then you can say around New York, we may see a pullback because this whole range right here was, let's say, maybe close to 90% to maybe 120% of this range, right? So if pound dollar moves all the way by New York session, 7, 8 a.m., and then expect a pullback into the range to close out Friday to trap traders, right? Friday's trap day. Okay, so that means a full daily candlestick in this regard, for example, would look like this. So what happened is that we'll open, say hypothetically, well, just open would be right here. We'll open, go up, and then there's the full move down, and then we'll close out. Okay, and that's what Friday with daily candlestick would look like. But on a 15 1-hour time frame, it could look like this. I'm not telling you exactly what we're seeing, but I'm just telling you what typically can happen as an example. We'll go to the charts and get more specific, but as a general rule, on a typical Friday, when you have a news like this, as I'm trying to help you guys navigate fundamental and how fundamental translate into technical, because if you don't understand fundamentals in terms of what pairs are moving, when, then and why, then you won't know what to look for technically other than, wow, it's moving. Why is it moving right now? Why Friday at 3 p.m., 3 a.m. in the morning? And why euro and euro yen and pound yen and euro dollar or whatever you may be trading, which specifically in the euro and pound pairs are like screaming, and it wasn't moving on, Thursday, or it wasn't moving on Monday. So why Friday? Why? What's going on? Well, if you're not paying attention and understanding that there is some weird volatility news, some economic data that either supporting the bank rate decisions and inflations and employment, stuff like that, and manufacturing, this is important data that the market will react, and the market makers will put some volume volatility into the forex pairs. So you want to be aware of that. Okay. All right, that's fundamentals. We're done there. Let's get to the charts. All right, and then we'll go ahead and wrap up this call. All right, first of all, let me go ahead and switch screen here and go to my dollar pair and pulling up now. Hope you guys can see it. Awesome. And let me go ahead and auto that. Okay, so this is the dollar pair. Let me go ahead and switch to this dollar pair. Okay, so here is the daily candlestick or the candle outlook for the US dollar. So we're going to start with the US dollar. Hold on, let me get a sip of my coffee here. Okay. US dollar is at 50% of its equilibrium from an overall higher time frame, weekly, monthly view. And we're getting into some really serious situation with the dollar in terms of the course of action, right? So basically, what I'm looking at from a higher time perspective is simply this. In some variation, this is what we're looking for. Simple as that, right? So this is on the daily, weekly, monthly, higher time frame. This is the typical movements of the chart that I'm looking for. And this is because of the way the technical looks, right? So let me go to the weekly. And I think everyone can see this. You got an order block down there, right? I got prices down there, up there. We got some confluences right here. And we got some right here, right? And then of course we got the lower the market here, right? Everyone can see we got a normal ebb and flow of the market. Hope everyone can see that. And let me show you what I'm talking about. I'm talking about this. This is what we have. Just pull charts to the side. And if you don't understand the ebb and flow of the market, if you do not understand that the market is one big oscillator, and I'm specifically talking about the forex market, right? Stocks is a little bit different. Indices is very close, and gold is very close. But the forex pair specifically is an oscillating market. And why I say that is because stocks, people come to stocks and they're saying, wow, dude, forex is not like stocks. Look, you're not, because you can have Google stock and Apple stock do this, right? There is no ebb and flow of that market, right? Maybe in the 5-minute time frame, it may look like it, but this is stocks, okay? And you can have stocks do the opposite. And then go down to zero. Well, what happens when it goes down to zero on, say, for instance, Sears? What happened with Kmart? What happened with certain other companies who are no longer in existence? They're out of business. Stocks is basically done. It's $0 and they're out of business. Okay, that can happen in a typical stock. So I hope that makes sense in terms of the ebb and flow of the market, right? So when you see that, all we have to do is, as forex traders, is basically understand, where are we in this oscillator? Where are we? Because if you understand where are you, then you can understand what direction you need to trade. And if you got that, you know forex. It's that simple. Forex understanding, it's really that simple. But it is far from easy. Now, with all that being said, it's fun. It's exciting. It's adrenaline rush for sure, right? So coming back to here, let's really get down to business here, because there's a lot more to that I can't even explain here into just top-down analysis. That's mentorship, right? So we have all that in the videos and recording. So let's look at here. We got this here. We can expect reaction here. We did get that reaction. We got 50% of this move from this swing, right? Swing low to swing high. You have to understand price action. You definitely have to understand market structure. If you don't, you will get hosed, right? But you can't just understand market structure from, hey, this is higher highs, higher lows. This is an uptrend. Okay, to where? Oh, I don't know, until it stops. Well, this is low and lower high, up into where? I don't know, until it stops. Is it going to go 50%, 25%? Well, I don't even know what that means. Is it going to go higher highs in terms of rebalancing? Rebalance for what? Do you know why it would go down? I really don't, other than it looks like an equal high and you're trying to trade patterns and animal patterns and shapes. That's not going to work. That's too simple. The market is not that simple to understand in regards to just looking at animal patterns. That is not the right way of simplistically looking at it. You have to understand it from a technical standpoint outside of patterns, of the animal patterns and the regular teacup patterns. You got to understand the market structure as a means of price rebalance and mitigation, right? In the economic sense of the world. That right there is a whole lot different story. And that's, of course, our mentorship. So from here, we are looking for price to come down to at least this level here. This is where price had reached that. This is on a weekly chart, right? And then here, we are looking for price to come down even here. Because if you look at it, this is the ceiling of the dollar, and this is the floor of the dollar, right? So from an IMF standpoint, in international monetary fund policy perspective, the dollar is moving from this level. We are at the top, right? Or are we at the bottom of this swing? We're not at the ceiling, but we're definitely not at the floor. But from a market structure standpoint, we are at a top from a recent top that is very, very significant, right? Now, could a dollar go higher? Of course. But what economic fundamental reasons would the dollar need to be pushing up? That is the most important thing that we must understand, because for the dollar to go way up here back to 1984 highs, and if anybody remember during this time in 84, I can tell you inflation was super, super high, an historical record of super inflation, and they had this crash, and that's when Alan Greenspan, who was the Fed chair at that time, was raising interest rate like 15% basis point. 15, it was like he did like a shock to the market and put it into a recession, of course. But I think he did some crazy like 10, 15% basis point interest rate increase. And then it put us into a recession in 85, 86, 87, 89. It was bad. And I remember that as a young kid during that time, and not really understanding the market, but understanding from a social standpoint of the impact that was going on in the US at that time. I knew inflation was high, and I knew we were in a recession too, especially when my parents got laid off. I was like, whoa, what's going on, right? So we had to watch our budget and things like that, and things that I wanted as a young kid, couldn't get it because it was crazy. It's very, very crazy time. And it was 19% interest rate in Canada. Yeah, it was crazy. It was a very crazy time. Well, are we in that crazy time? Right. So that's what you got to understand as well. Are we in that crazy time? No. The history does repeat itself, but also we learn from history as well. Right. So we can say that we probably won't see something like that again. This would be, to me, rational part of the market, because you have to understand what's going on. So this is realistic. We're there. We are going down because history has said it has gone down. So that's what we're looking for. And do we have fundamental economic reasons on why it could or should go down and go up, right? So let's go back to the daily. If everything I just explained to you is like, huh? Then that means it's just more education, more coaching, more mentorship, and reach out to me, and I'll be more than happy to watch you if you're and coach you if you're not one of our coaching students. But if you are, then you already know we are already looking for some dollar strength, right? We have already reached the equilibrium of price here, right? From a 50% perspective, we've already got there. This is what I'm talking about. Again, just from a clear view, we've already got here 50% from that swing low and that swing high. We're already there. Now we are doing some rebalancing. We got some imbalances here, and we got some rebalancing to do before we go where? Lower, right? From a higher time perspective, we just looked at it. So we got this correction here. We came all the way down. Let's look at it just a little bit closer. And the reason why I'm spending a little bit more time on the dollar, because it really covers 80% of the volume of the market to gold or dollar crosses and indices, okay? And you'll see the correlation or inverse correlation as we talk about it. So we have here, we came down, we had this price went up because of the recent non-farm payrolls decisions and so forth. This is what we're looking at in terms of flow. We got a nice imbalance. We got a nice here order block here, which we came back and mitigated, and we got some nice imbalances here in terms of some premium imbalance. Okay, that right there. That's a nice gap during this fall right here. And as you can see, there is a nice order block that I got right there. So don't know if price is going to go there. I don't know the future, but I can say I am looking for more dollar strength. Okay. I'm looking for more dollar strength, and I'm looking for more dollar strength to this swing low and this swing high. this swing high and this swing low. That would be the equilibrium price of this recent swing, okay? Let me make sure I clarify myself here what I'm talking about. So I'm talking about this swing high when we had this shift in market structure, and then we had down, and then we got this swing. The equilibrium is right here. This is my line in the sand that tells me and separates from the premium and discount, okay? Right there. Right now, we're in a discount of this market structure right here. We're in a discount, meaning we would want to look for more bullish, right? We're in a demand zone. This is not where you want to look for shorts from a higher time perspective. Scalping, a little bit different story, but we're talking about a higher perspective. We'll get into our shorts and long in our live trade room sessions and the coaching students. But as for a over higher time perspective, we want to see more upside, right? We want to see at least to the equilibrium, right? And if anything, right, we want to see maybe a little pullback, but we definitely would like to get up here into this order block before we start to see more downside movement, okay? So this right here, now we're getting into a premium. This is all supply zone, right? This is anywhere in this area, you want to go ahead and start to look for signs. This is when we look for signs. We look for economic signs. We look for economic intermarket signs, intermarket correlation signs of where and how it supports the case technically on why the dollar should be weak, okay? And then therefore, we'd be looking for more movement to start shorting it and then go down to our final destination, right? This right here, to me, this will be the remainder of 2023. I'm looking for dollar to get somewhere up here around June. This is when I expect a Fed pivot. I know all of these terms, you're like, huh? I get it. And then that's when the pause interest rate happen. Right now we're raising the interest rate. When we get that pause in interest rate, that's when the dollar starts to like, all right, so maybe I can do swap dollar. All the investors start to swap their dollar into something other than the dollar. And then we get into more of a risk on sentiment situations. And then people start to move their money into gold, dollar, indexes. I mean, not the dollar, indexes, indices, and stocks. And then this is when we'll start to see stuff go down because the dollar interest rate will start to zero out the more interest rate. And investors are going to need to swap their investments into something else, into other derivatives and other higher yield bonds and stuff like that. So this is when we would expect the dollar start to get decreased as the Fed start to look into decreasing interest rate, right? When they start decreasing interest rate, this is when they start putting gas on the fuel here to shorten the dollar. And then this is when we'll be looking for the weakness in the dollar. And that's when we'll probably start to see the more upside to pound dollar, euro dollar, our dollar, and such nature. Okay, so that's higher time perspective on what we're looking for. If you're looking to get into more day-to-day movements and things like that, well, then that's when you need to come into our live trade room, become one of our coaching students, so we can talk it from a day-to-day perspective. But here, we're just talking to a weekly top-down analysis, overall market sentiment, overall market conditions, and what to look for. Just real quick, as I zoom down, we see that the dollar has made some lows here, and it came back and it retested that. I'm telling you here, this is what I'm looking for in terms of the FOMC rate decisions. I am looking for this to bounce back up. This is what I would be looking for. Other than that, until then, nothing else tells me that we are going lower until we break this. So as of right now, I am bullish on the dollar. Okay, let's look at the other markets. Let's go to the first intercorrelated market, which is the indices, S&P 500. Let me go ahead and go to zoom it out. As you can see here, the market has hit pretty high here. We came all the way down to this in October 22nd, right? Just with my line in the sand of the low of a typical bear market for the stock market. We came here, we tipped that down. This is a possible target, but this right here will be the ultimate target. I do not foresee this. This is very, very low probability. This is medium probability. Right now, this would be high probability. If we were to say, how much lower could we go? Well, this is medium probability. This could be the lowest. I could see the market coming back down in terms of the US stock market and indices before we start to say, hey, I think we'll bottom out for 2023. We can now get ready to enjoy the fruits of the S&P 500 indices, US 30, NASDAQ, and get back to record high, and then get back into the trajectory of the bull market coming at the end of the year or towards the end of the year, well into 2024, as we get into more of a risk on sentiment situation, to where people start to feel confident, they're greed back in the market, and now we're ready to start going up. Okay, so until then, we're more in the fear, more of a risk on sentiment. And when that happens, we are looking to short, or we're looking for a bear market in terms of this particular indices, right? So we covered a lot of imbalances here. Let me go ahead and get that out, get that out, get that out. And we just had a bear day on Friday. Okay. And we came back down. This is S&P 500, by the way. We had this shift in market structure. We had this here. We broke this change of character here, came down, came back up, rebalanced, created that order block, had some rebalances here, got an imbalance sitting right there. We'll go ahead and mark that while I'm at it. Again, this is indices S&P 500. And we came all the way down to this low here, right? So this was the equal low of the S&P 500 of where we were located, right? A lot of orders here, and we got a lot of liquidity there. Now, what I can tell you, with the expected dollar strength, right? I'm looking for dollar strength, not to say it's going to happen, not to say it's absolute, and I can foretell the future, and I'm calling tops and bottoms. I'm just saying this is what we're looking for. Now, if something else happened, then we just have to reassess. But typically and fundamentally, if there is interest rate for the US dollar, then that will be a strength and a risk on perspective for investors to swap into the dollar for investments. Then therefore, we are looking for more bearishness in terms of the indices as inverse correlated markets, okay? Just to kind of clarify here as I mark up the charts, this is what I am really projecting to see. I'm projecting for us to come back down, really to here, come back up, retest this, and this is what I'm looking for. I think we are really going to come down to there. Okay. I'm going to reforecast this. So I see the possibility of us going down there and a medium probability of us coming down to revisit the October 22nd historical low, right, since our peak historical high of December 2021. So October 22 is the lowest we've been since that peak, and we haven't been this low since November 20th. 2020, right? To November 2020. So it's been 3 years since we've seen this low, and it's been just about a good 8 months since we've seen this, like 7 to 8 months since we've seen this low. Well, we are possibly coming back to revisit that. And that's when the dollar was at parity with euro, right? So this is medium probability, but I wanted to make sure we mark this out we're not surprised if it does come this low, right? So we're looking at around 35, let's say 35.25. And this is with the continuing strength of the dollar. Now, keep in mind, we do have some liquidity areas all in here, okay? It is all liquidity that can be also mitigated, and it doesn't have to go to this extreme low. All of this area, basically what I'm saying is your, let me see right here, all this right here, this would be your demand zone, okay? In this area is when I would be looking to buy, right? I would be looking for dollar weakness. I would be looking for strength in indices, look for confidence and more risk on scenario for the dollar, right? And the indices, I would look for more case of the market getting into more of a risk on scenario. So to me, would be my demand zone, right? This is when I would be looking to buy. This is my bearish area. Now, if I was to put this into a swing low, swing high perspective, this is what I'm talking about. So we're in this part right here, this 50% we did hit. We're getting into the discount area. Once we get into the discount area, this is when we are in the demand area of the market, right? It's previous swing low of October 22nd from a higher perspective. So if the dollar continues strength with the expected FOMC rate decision coming in March, and then the next one is in May, which depends on what Powell says, right? At the press conference after the rate decision on Wednesday. So there's going to be a press conference. I would suggest you to watch that. It's only 30 minutes. It's it'll come up on YouTube. It'll come up on the CNN news or Bloomberg's financial news, and it's show there for 30 minutes. It's be very, very important to understand the outlook of what Fed Powell will be saying. If he says anything hawkish in regards to, hey, we're still on track to continue to raise interest rate as originally projected to 5.25. We just completed a 0.25 basis points, and we're looking to raise it another 0.25 basis point. And then at that point, we'll be looking to pause interest rate, blah, blah, blah. And if he says anything like that, or if he says anything additional to, we're not looking to decrease interest rate any time in the year of 2023, that's more hawkish comments and things like that. If you hear anything like, inflation is coming down at a very satisfying rate, we decided to go with a restructured plan and not go as high as expected in terms of interest rate. We have only raised the basis point to 5.2. We raised the interest rate to 5% from with a 25 basis point, and we're not looking to raise interest rate any further. We're looking to pause interest rate at this time for blah, blah. Those are all dovish type of comments that says, well, we're done. We're not going to raise interest rate. We're actually going to pause now, and they're going to do the Fed pivot now. That might have an interesting situation, and that happened. We may see in a quick push, and then we'll start to do this, right? It's more like, okay, we're done. This is Fed pivot now versus Fed pivot here or here, as we would expect from around June, right? Because we were expecting May to do more interest rate decision increase, like a 25 basis point. Therefore, it's going to continue to strengthen dollar, right? But if they do the Fed pivot now, well, that's what we got that initial push. Guess what? We can get ready to see some more risk on situation scenario because of what Powell says, right? So it all depends on what they said. So if you stick to the script from what they initially said in terms of continue raising interest rate to their target of 5.25% to combat inflation, then that might be a little bit different story. So things can be a little jittery on that FOMC rate decision after initial push. That's why you don't want to trade news. You want to trade the aftermath of news. Okay. So with that being said, I'm bearish on indices unless something different changes. And we had a little bit of erratic market conditions last week due to several U.S. banks, and there's a couple more banks that they're talking about that need to get bailed out, and due to Fed taking over some of the banks, regional banks, because they are doing they're not getting full liquidity to be able to satisfy the depositors because of the imbalance sheets and on the sheets, right? So on the board, in the books. So when that happens and banks have to get bailed out because they're not doing what they're supposed to be doing, then that's when the Feds have to come in, which is, it's sad, but it's not surprising at the end of the day. Okay, so that's the S&P 500. So we are looking for more bearish movements. Let's go to gold. This is also inverse correlated. Oops, let me go ahead and put that there. So let me go ahead and push this, looking at gold, get this out the way. And this is surprising, to be honest with you. I'm going to talk about this because this was not expected. There was a quick change of character right there, and we shot up, right? We shot up past that, and we went right back to this previous high here that we had on April 22nd, right? April 22nd, which was like a couple of months after the Russia-Ukraine situation, right? The Russia-Ukraine situation was right here, right? In March 22nd, March 7th last year. So after that, boom, then we came back down. We touched one more time, and then before we came all the way down. Well, we just came back to that, right? And that wasn't because the dollar was just weak. That was a little bit, but it really had to do with the irrational situation with the regional bank, right? And it totally caused a lot of fear, and a lot of people are investing into the gold, right? And this happened with also BTC, which we'll take a look at in a few minutes, right? So Bitcoin and gold started to look like a safe haven situation due to the fear of banks in the US. So with that being said, we have this gold rush, if you will. However, I do not believe we are going to break that, right? To break that and go to the previous historical high of gold, and go ahead and go to the weekly to talk about where the previous historical high here. The historical high of gold is $2,076. $2,076 is basically the high of gold ever. We've never reached this high of 2076. We are going to revisit that, but this part right here, you see how strong that weekly candlestick here? I do not foresee us going this high unless there is something that still needs to be fished out from the banks. That's the only reason why I would say even we go this high, okay? I didn't even think we would go as this high. Hell, I didn't even think we would even go this high, because in a normal ebb and flow of the market, as you can see here, we were going down with more expected dollar strength, right? But because of the movement, there you go. I was just about to say this. Because of the movement of this pair, if you look at this, this is much, much different than all of the movements from a fractal standpoint of everything that we've done in the past, except one time, right? And I'm gonna point that out in a minute. This is very, very important. This is a very good insight tip I can share with you because it's easy to explain, right? We didn't get that movement here. We didn't get that movement here. And I'm talking about this type of move. This type of move. You see how that move was basically a vertical between 90 and 70% degree. That's like a perfect almost sentiment movement of just straight bullishness. And it created all this imbalances, right? And it ironically went, right? Not ironically, but think about it. It went basically, or it's getting ready to come very close to that April high of, 2000, right? $2,000, basically right on the money, right? Psychological level. But I want to break this down. It's very, very important because there's going to be a lot of traders who's going to be thinking about going gold. And I would say, I would caution that. And I would caution that. And here's my cases for it. Not only fundamentally, right? So as we get ready to raise interest rate and the banks start to get saved from the federal. So everything from the bank could basically be, washed out and resolved this week. And people confidence start to raise. And it's like, okay, now I can go ahead and put my money and move some of my money out of gold and put it back to the dollar. I feel comfortable now because they're going to raise interest rate. And they're going to probably talk more about the dollar on Wednesday. So what that means that typically by Wednesday is when we may get this pullback or down movement. Why Wednesday? Well, a couple things. Number one, it's the FOMC. And from a market maker cycle, as our coaching student know about it, we call it Wednesday reversal day. How freaking ironic. Wow, really? Yeah, that's real. Oh, okay. Well, how much can it come back? Well, let me walk you through that, right? So we see that movements here, and let's look back in history and see when did we see that much movement and what did it do? Well, it didn't do it here. It didn't do it anywhere here. And I'm talking about 90 to 70 degrees. That was an uptrend, but it wasn't like a sudden movement in like five daily, 6 daily candlesticks, right? This right here was 1, 2, 3 candlesticks, but not like 5 or 6 erratic, right? That it didn't happen here, didn't happen there, it didn't happen there, it didn't happen there. Wait, hold on. That's 5, 6 candlestick movement, just like that over there. That was 5, 6 candlestick. That looked like a nice, 90, 70 degree move. Oh, okay. Yeah. Oh, it pulled back. Yeah, that's exactly what happened. And that's exactly what we are going to be expecting. We are going to be expecting at least, right, from this swing low, this swing high, what we call a 50% snapback, right? I'm doing a little bit of coaching here because I just want you to see so that you guys can be careful for those who are thinking about longer than dollar because you think you missed the gold rush move right here, right? Well, guess what? I can tell you, we are looking for gold to come back 50%. So in that regard, I'm short on gold, right? I'm more bearish, not I haven't shorted gold, but I'm more bearish on gold. Okay. So I am looking for gold to give me some signs of liquidity, something that looked like that, right? That is what I'm looking for. That is a liquidity wick candle. I hate to say this, but this looked like more of that a high candle in terms of got you. which is what the market makers like to do, right? Let me put that back because I want to get this 50% marker. So I'm looking for a snapback of this candles here, looking for this rejection. And here we got a tweezer top rejection candle, right, on a higher time frame. On a lower time frame, let's say go to the 1 hour, it's much, much different. You get more of a higher highs, and then you get a high. So it did not take out that high, right? And it created what we call like an M pattern, right? In terms of a hump. That's signs of a reversal. So this is what we're going to look for. We're going to look for this high get peaked. We're going to look for another swing high. That means don't short it on that first one, that first leg. Get the second leg and see if it takes out that high. If it doesn't, then you will be looking for what we want. Short this bad boy, right? That's what you want to do. You don't think it's going to keep going up to the historical high of 2000. Not yet. Not quite. Not yet. For that to happen, we need the dollar to be just stinking for this to keep going up higher. Okay. So I'm looking for gold to get up here around possibly just a little bit more, right? It's going to go up more, just a little bit, maybe on Monday, maybe on a little Tuesday. Well, you said it was going to be bearish. Well, yeah, but it needs to start this week looking bullish to get retail traders thinking, oh my God, it's going to go to 2000. It's got to look like it, right? It can't just give it away, right? So it's got to look bullish. And then on Tuesday and Wednesday, do this to you. Okay. And then I would be looking for more movements down here. Okay. So that is what I'm talking about. It's at 50%, right? This would be I'm sure there's going to be some market structure here that would give us some signs of where we can mark up for a change of character. As of right now, I just have it to the 50% because of course, it may look something like this on a 4 hour or 1 hour, right? Then we're looking for that change of character confirmation there. Well, probably won't go this high, but something like this. So this high won't take out that high. Then it start to come down. But this is my target right there. That is my 50% target. So if you wanted to look for that, make sure when you do get that bearish sign, as we will be looking for it, we do have our predictive high, predictive low, and our artificial intelligence report will tell us most likely after the FOMC rate decision, are we going to be going higher, or should we start to look for lower prices? And if you want access to that report, then you have to be one of our coaching students. As this video be viewed by the public outside of our academy, but we do have access to the inside information to get to know if we are looking for lower prices or are we looking to high prices, right? I could be totally wrong. And, the artificial intelligence is what I'm going to be leading on to get that confluence. And if we get short and we get that lower prices, trust me, you are going to want to short this at least, and let me get the price in here, at least to about 1900. It's not freaking ironic. Look at the price, 1900 round number, from 2000 to 19, right? 1900 round number, that would be the equilibrium price of I'm seeing gold. So at gold, I'm bearish on gold, not on gold. Let me go to oil real quick. So just to kind of show you what oil is doing. It's doing exactly what I thought it was going to do. I said I was looking for gold, oil to be bearish, and sure enough, it did exactly what I was looking for it to do. It was in this range for a good month or so, like from December 22nd, we were in this nice range, right? Let me go ahead and mark this up. So we were in this nice range, and I said that we should be looking to, every time it pops, you want to short it. That means every time it got up here, short that bad boy, short that bad boy, short that bad boy. You would want to be, you can't trade ranges. You just got to know what your overall bias is, right? So in this regard, I would bearish overall on oil because of the economy and stuff like that, demand on oil, blah, 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 right? So if we are biased, then you would want to be on the selling side of the indices, right? You would want to be on the selling side of the indices right here, looking for that and just looking for that and looking for that. Okay, so then we will be looking for the selling side of our oil. And sure enough, we did exactly what I expected us to get to in that particular order block, right? Now, again, this is just a real quick, just general overview. Coaching students we get more details in terms of order blocks and balances and things like that, more detail on a lower time frame on Tuesday, Wednesday, and Thursday during our light trade room. So we are definitely going to be deep diving into all of our pairs to really get a real good, closer view on what direction and how much pullback and the smaller time frame we need to see that. But as of right now, more oil, more bearishness, okay? So if I was to look at this from a higher time perspective for oil, what am I looking for, right? What am I looking for? Well, first of all, we got CAD news coming out this week, right? CAD news on Tuesday. Right? So Tuesday, which is a correlator or a commodity pair, right? CAD is a commodity currency for oil. So if the CPI depends, and I would expect a little bit of pullback, but in terms of us coming back into this range, I would say it's a very low probability. If we do not break this, let me zoom in a little bit. Right here. So we're in this order block here. If we do not break this $70.37 oil on Tuesday, and we get more, which I do expect to get a little bit of bullishness for this week for oil. I do expect a little bit of CAD strength, and we'll take a look at CAD. We may come in a little bit lower on Monday, and then Tuesday pullback. Right, so I do expect a little bit of bearishness Monday, and then Tuesday get that pullback, and then go from there to start moving down here, right? And the first order of business is about right there, and we may be in this range for a little bit, okay? I would need to wait for more development in the market, but as of right now, this is where I'm seeing. Okay, so that's good for oil prices in terms of gas, commodities. So good time to do some little bit of driving. Gas prices is a lot more digestible than up here. So, which is good. But at the same time, if you're trading oil, if we're looking for oil prices and where it's going, oil is weak. It is bearish. We are in a bearish market for oil. I do not expect oil to come back up here to $82 anytime soon until the market start to get into more of a risk-on situation, right? In the meantime, I do expect a little bit more bearishness on oil, and then maybe CAD strength might pick up a little bit, and we may be heading towards this way, but we need to break that 70.49 before I even say we'll come back in this range, which is possible, right? Again, I don't see it come all the way up to 82. We could see 74, low 74, but I think we're going to be in this low 70 range. In fact, we could be in this type of range for just a little bit more. Right, this is what I would be looking for before we come back down. Ooh, right? You guys can see that type of pattern here. You see that? Range, drop, range, drop, range, drop. Okay. Until I see some more evidence of possible correction in the market, until we get more stronger in the economy for both Canada and US, I would say expect more ranging in the oil, and we're in a bear market, more lower prices on oil. Okay, so overall, I'm bearish. I do expect a little bit of pullback sometime this week, and maybe in this range for the rest of the week. But for now, down, up, and then we'll see coming next week, Sunday, what does it look like? Okay, so that's oil. So let's look at BTC before we get into pairs real quick, because once we get into pairs, we're going to be flying. Okay, all right. What did we do? All right, so I had, possible ranging for BTC down here. This is where I had us going down to, and we did go down there in terms of, in terms of Bitcoin prices coming down to 1959, and it came down exactly what I had expected it from a market structure standpoint. So for Bitcoin, we did come down to about 19.5, right? That 19.5 level. We didn't take out this imbalance here, which is fine, right? But we did create a lot of imbalances here. You guys can see that. Put that right there. So we did get a lot of imbalance here. Now, keep in mind, we got to understand, we got the Bitcoin halving coming up in 2024. So Bitcoin is going to come up here. If you do not believe in that, that's fine. Let's put it this way. It's done it in the past. It's done it here. And it's going to do it here, right? And each one of these are Bitcoin halving situations, right? And that's when the miners start to take a little bit more difficulty to mine a Bitcoin, and therefore it becomes a more of a scarcity commodity, right? Bitcoin is more of a commodity, it becomes more scarcity. So anything is more scarce or fewer, right? And it's in high demand, or it has a very strong demand, well, higher prices. So that is what I'm eventually looking for Bitcoin in 2024. So Bitcoin 2024, look for 70K, 80K before we pull back, right? A big pullback. So 70K, 80K, a Bitcoin. Right. So we'll definitely go past this $67 level where Bitcoin was experiencing some very nice volatility last year. So this was back in 2021, when we had Bitcoin looking at $69,000 a Bitcoin, $69,000 a Bitcoin. Well, we're coming back there. And this is evidence to tell you how and why. Okay, so if you look at this right here, I got some order blocks sitting right there. You guys can probably faintly see it, but let me just go ahead and mark that. So we're here around the 30,000, 32,000, and then we got the $40,000 price, right? It's coming. And I'm going to show you how, technically. Well, first of all, it needs a rebalance because the dollar is going to be looking strong. So I do expect us to come back down. Let me put this here. See what I'm looking at from a Bitcoin charts perspective here, because right now we're sitting at about 26,000, 26.8, right? So 26.8, which we took out the 26.7, and we are far above the 25 back in February, right? That was nice because we didn't see 25 since August. Since August last year was the last time we saw $25,000 per Bitcoin. August. Well, August last year till just last month, February. And just like this move right here, look at this move. It's become more of a snapback, right? We now are at 26, 27. So and I put this range here because this market here is how Bitcoin moves. It's in a range. So with this swing high, this swing low, I'm looking for Bitcoin to pull back as much as 23, yeah, 23.4. This is what I'm looking for. Let me go ahead and make that marker right there. No, not that one. This is at, let's call it 23,400. What I'm looking for Bitcoin to come down to 23,400. This is what the FOMC rate decision and so forth, right? This kind of went parabolic, like I mentioned earlier, like gold, right? This is because of the bank situation that people are like, I tell you what, I'm putting my money in gold, and guess what? I like Bitcoin. Bitcoin is, start putting money in Bitcoin. People who never bought Bitcoin, right? And it's like, oh my God, I can't have my money or in all cash and fiat. So people are even who have never bought Bitcoin even got a little bit of Bitcoin and said, let me try this little thing. It's someone's saying it's perfect time to buy, I heard this guy in FX Prosperity Academy, I don't know, this guy named Leonard or something saying, hey, we should be buying. So let me give it a shot. I'm trying to tell people, said right here, all of this was perfect time to buy and hodl. Perfect time to buy and hodl. Okay. So, and I still say it's not too late. Obviously, well, you don't want to buy right here. Wait for a pullback and then get into some Bitcoin. So we're going to come close to 23.4. I would say wait for the FOMC rate decision. And we are going to definitely, after we get a little bit of pullback, this is what I'm looking at. Okay, that's what I'm looking at. So with that being said, for now, what type of movement change would that be if I was to buy Bitcoin? Let's say I did buy it at 23.4. Well, as soon as it goes to, around 32,000, which it will, you're looking at a 37% return on your Bitcoin investment. Okay. Once price, and if you notice, I said once, not if, but once price get up to $40,000 for Bitcoin, you have a 72% growth. Let me repeat that. 72% growth on your Bitcoin purchase if you would have purchased down here at 23.4 when it gets down. If that does not excite you from an investment standpoint, because there's no other commodities, there's no other gold or anything like that, that's going to give you a 72% increase once Bitcoin prices get to 40,000. And I'm talking well before, 69, the previous high of 68, 67, you see 68, 9, which we are eventually going to get there, right? So if you go from here to here, 40,000, you're looking at a 70% increase. We will get to 50. Once you get to 50, you now just got 122% on your money. And I'll just stop there because it just gets ridiculous after that. 122%, you just double, right? So if you put $5,000 worth of Bitcoin, once Bitcoin reaches about 25,000, trust me, if you're not a believer of Bitcoin or cryptocurrency, that's fine. Whether you want to believe it or not, people do believe it globally, not just in the US. So people are buying and people are holding. There's different ways to trade it, hold it, and invest in Bitcoin. The most simple way is to hold it and buy it low, right? So if you were to buy it when the pullback happened, buy $1,000 worth, when Bitcoin reaches 50,000, and I would suspect to see Bitcoin go towards that after the second quarter, right, towards June, July, that pivot, we will start to see prices start to go towards the 50,000. I would say by year end, we could be pretty much well into 50, close to 60,000 by year end as we get ready for the Bitcoin halving event in 2024, right? So if you put 1,000 in, just let's put it this way, conservatively, you have $2,000 worth of Bitcoin investment by the end of the year. You put 5,000, you have 10. If you put 20, you have 40. If you put 50, you have about $100,000 worth of Bitcoin value that you can cash out 100% return once Bitcoin just gets to 50,000. Okay, and I would, I'll go on the limb to say I would look to see that possibly and realistically can happen by year end 2023. Okay. All right, so that's Bitcoin. Something for you guys to think about. Okay, let's get into forex pairs. And we're going to go right to it. Okay, start looking at it from the daily perspective. Yep, we're going down. I'm still bearish on the dollar, right? So we're having around here. We had a ranging week. So look for a euro weakness, and I'm looking for, I don't know if we're going to go down to 1.01, but let me put it down to at least equilibrium, and we'll be hovering around there. I'll be looking to get price to go back up around that time. It all depends on what's going on around Fed. So that is the 1.02. I'm still bearish. I am looking for a breakout of these touch here. 1, 2, 3 big touch here around the 105, right? I will look to see a revisit of that. We have not been able to take out this high of 107. So as you can tell, if you go to the lower time frame, it is a pullback, and I'm looking for dollar strength to kick in, to kick it back to the 105 level. And then if we do, and I would look to see the break of that, then we're going lower, right? We're definitely going to go lower. We'll be going 103, pull back a little bit, and I would like to see it come down to about the 102 level. Here is when I'll be looking to start buying euro dollar, okay? I'm not looking to buy euro dollar until I see what happens after the FOMC rate decisions. What's the decision on a dollar, okay? So in terms of euro dollar, I'll be looking to short euro dollar on bearish. Okay, let's go to the bound dollar. Pound dollar, same thing. Let me go ahead and reevaluate this. We came up because of the bank situation, so the dollar took a little bit of beating. However, we still have not been able to take out this high on the daily chart. So if you look at it, we have not been able to take out this high of 1.22 for the pound dollar. We are having the pound, right? The pound interest rate decision happening this week. Now, with that being said, I don't think the interest rate decision for pound is going to help pound in terms of its currency, right? If it does come strong, the dollar is just going to be just as strong. We'll see, because the dollar is the day before. I would expect to see some volatility here, but my point is, do we take out this high? That's going to be the main point. Do we take out that high? If we do not take out that high, we are going lower. Now, this week could be a ranging week. Now, don't think it's going to go here yet, but it could go down on Wednesday, and then Thursday could be see a pound strength, right? So yeah, sure, we can do that, and then we'll come right back high. But we still don't take out this 1.21 high, 1.22 high. It all depends on what happens. So that is what I'm saying, that I'm not quite confident that we'll take out this pound high. So with that being said, pound dollar is going to be a very high volatile pair. It would be a very difficult pair to trade because of the two bank rate decisions that we have that may cause us to do this for the week, just like the euro dollar, right? The euro had a rate decision last week, right? Well, you see how the euro dollar just looked for the whole week. It ranged, right? We could be seeing this for a pound while euro dollar is still coming down, okay? Now, the most important thing to also know, is there a reason for it to come up or come down? Well, to come up would be just for liquidity, which it's currently at right now. It's already bullish candle, as a bullish candle, but I don't see any other reason to come up here. Not, if anything, maybe right here for liquidity, but I don't see us breaking this shift in market structure here. I'm still looking at this as coming back bearish, okay? And we got some very, very, very strong imbalance, or I would say fair value gap here, right? Very, very strong. I got two sitting right there. Oops. So we got some discount for value gaps that I like to see it come all the way back down. And it may not happen this week, but maybe next week. I'm looking for a pound to come back down to 1.18 to 1.80 area if we cannot take that this high. And if we do, I don't see it taking out 1.22, right? And everything can happen, but for this to keep going up, that means the dollar just have to be weak. That means the FOMC rate decision, it just didn't have an impact. Dollar's weak, pound just overtake the dollar. That's the only way that can happen. And that happens, gold is going to keep going, Bitcoin is going to keep going, and indices will keep going up. I think we just looked at the gold. That didn't support what we think should happen with the dollar. We just looked at indices. That does not look like it will support the dollar weakness. It looks like we're still heading for a possible dollar weakness. Now, of course, gold was up because of the bank situations in terms of, safe haven currencies, of the fear of what's going on with the bank. But you see where it was close to a very, very high, historical high, record high. It's not just going to keep going up unless there is some more geopolitical situations, such as the bank, that will cause gold to keep going up. So everything is kind of supporting, at this point, the dollar strength. Okay. So with that being said, that's why I don't see pound dollar coming up there. Anything can happen, but I would be looking for signs on a lower time frame, and we'll be taking a look at our artificial intelligence report each day as we analyze the pound dollar, to see more prices, lower prices, and to see if that the AI is supporting that sentiment of a bearish market for pound dollar. Okay. Hard dollar. This has been bearish like it ain't no tomorrow. This is higher highs, higher low, lower low, lower high, lower low, lower high. Just doing exactly what I had already come down to, right? We are already at equilibrium. We're just there. We better surpass that. So if you were shorting it up here, you just made all this money, right? So with that being said, I am looking for to come back down. Looking for more bearishness. Okay, as of right now, we may come back up here, right? We covered all this imbalance that was right there. That was a nice imbalance right there. So in other words, when we came down right here and price came down, and then the next candlestick right there, you see that imbalance? We had a big old fair value gap that was sitting right there. And when you have a big imbalance that's just sitting right here from this whole box, and it's hitting at a very key strong demand level, right? Didn't even come all the way to this order block yet, right? If you notice that, we still got that imbalance sitting way over here still, that discount imbalance sitting way over there. So I would expect price to come down a little bit more and take that out, but instead it came back up because it had this bitch pushed down, and boom, it just cleared that imbalance. You see that? So that imbalance just went away and it just cleared all that. And then price went up a little bit more, but it did not take out that high. And then look what it did. It dropped all the way back down. Range, and we're right back to that equal high, right? So we're well into that particular order block sitting right here. And we got another order block sitting right there, but we're well into that order block. Well, I think we're done now. Now we're back. Let's get back into the normal ebb and flow of the market. If we do not take out this high, I'm looking for dollar to take over in terms of strength, and let's take it back down with the FOMC upcoming FOMC rate decision. I would expect our dollar to come down. Okay, so our dollar strength, I'm bearish our dollar. And CD dollar. And CD dollar came up and look what it did on a daily chart. Look what price is at and why did it stop there? That's NCD dollar, right? So when you look at this, and you look at this whole fractal right here, this was the high of NCD dollar that was in February. We were here in December 22nd. We were near here August 22nd, and we have not been higher than that since June 22nd, June 2022. Sorry, June 2022 last year, August 22 last year. December, we have not been able to break this 0.65 level on NCD dollar, and then we came all the way back down. Okay, now we came back down obviously because we've been having some currency, dollar currency, increase, right? And then we had this little scare with the dollar being weak. Boom, came back up here. Now there's a couple of things that you may want to look at, right? First of all, we got some imbalances here. That's the first thing. So we got some imbalances down there. Well, yeah, but we got some imbalance up there too. You're right, we do. That's right. Oops. It's right there. We do. Now, think about it. What needs to happen for NC dollar to go up here? Well, we need a dollar to be weak. Okay, so you need a dollar to be weak to go up 160, 150, maybe even 191 on a 70 pip range pair. That means this pair would need at least 2 to 3 days to move up there. And you need that much of the dollar strength coming up. Well, you got FOMC rate decision coming up on Wednesday that is going to strengthen the dollar from a higher interest perspective, right? Well, without this taking this high here of March, we didn't take out this high on the 13th, we didn't take out this high on the 1st, and last week we hit it several times. It's struggling. So if it's struggling, and I got FOMC rate decision coming up, I would not want to long against the dollar, right? I would not want to long NCD and short the dollar. Basically, if I long New Zealand dollar, I'm essentially shorting the dollar. I don't want to shorten a strong expected dollar. So therefore, and if you notice, we did not hit equilibrium like we did with Australian dollar. So I would expect New Zealand dollar to come down and hit this equilibrium, take out this imbalance, and come where anywhere in this area for us to consider going long. Once we get into our discount zone area, that's when we are looking at a discount price of the market structure to say, hey, this is time they're looking for to buy. Okay, this is a very good value. This is when the market pull back. This is that Fibonacci. This is that premium and discount, the pull back to 50%, 618, 786, 886. I don't know if we'll go that low, but 618 and 50%, it's also known as the Fib golden zone, golden pocket. This is where you want to go. Okay. I hope that makes sense. I hope that helps you and support in terms of what you're seeing on New Zealand dollar, and hope you are feeling the same. If not, this is what we are looking for. And we're going to go to our artificial intelligence to help confluence and say, hey, are we seeing lower New Zealand dollar or not? Okay. All right. So for dollar CAD, nice. So dollar CAD has had a nice bull run, and it went all the way up to where I had it kind of expected to about 1.386, and then it nicely pulled back, right? And we've been in this range all week. Now, this is the range of the dollar CAD. With the expected dollar CAD strength, right? And if you're looking over here in March 2020, go ahead and pull the weekly. Could we go that high? That is the question. Could we go this high before we start to come back down? What would need to happen for dollar CAD to push up? We wouldn't have to have some, some weak CAD news in combination with maybe strong dollar news. Okay. If not, if we get a strong CAD news with the expected CPI data coming up on Tuesday, we can see as early as Tuesday, possibly, of what could happen with dollar CAD. And then kind of finish off on what happens with the dollar come Wednesday. Okay. Now, let me go ahead and mark this up. Knowing that we have not been able to take this high, I would say we could potentially see more of a pullback, right? This is going to be very, very key from a daily perspective, from a market structure standpoint. Right now, dollar CAD is an uptrend. It is an uptrend. For us to see as a downtrend, it need to break 1.36, let's say 1.366 even, 1.366 even. We would need to see dollar CAD pull back and break that and stay below. So in other words, we would need to see this. So what would need to happen for that to happen? Well, we need CAD to be strong and then dollar to be weak all week. I don't see that with, I can see probably the CAD strength, but I'm not in the camp of shorting against the dollar of expected FOMC rate decision, right? I just don't see that. So the pullback, yeah, possibly, right? To get people thinking, no, we're short. We got to shift in market structure, but we need to break below this and stay below that to have a change of character. We could poke below, and then we could come back right back up. Okay. So with that being said, I am a little bit short-term bearish on dollar CAD, but we need to stay below 1.366 even. If I don't see that on Wednesday and I see this, we are going higher, okay? So as of right now, without me, trying to predict the market, I can only say fundamentally with the dollar strengthening again, as you can see across the dollar pairs that I'm calling euro dollar, pound dollar, odd dollar, New Zealand dollar, looking at the dollar index, looking at gold, my sentiment's still the same. Dollar strength, that means dollar CAD could be going up. So we could be in a range this week as well, just like the pound dollar. So we'll see. US dollar, Swiss francs. Nice move. For some reason, it could not take out that low. That's weird. So if it can't take out that low, that's dollar Swiss francs. We have dollar strength coming up. This was a nice little pullback. I could see maybe pulling back a little bit more of getting that imbalance that was created on that move coming up. So it's yeah. And I will be looking for this. Okay, so I'm looking for a little bit of pullback on dollar Swiss francs, which kind of makes sense, right? Monday, looking bearish, trap traders going bearish, and then Wednesday, boom. Just that simple. A little small drop on Monday, Tuesday, take care of this imbalance, looking bearish, looking bearish, looking bearish, Wednesday, boom. So all those traders who are on Monday and Tuesday get trapped, get short, market makers rebalance, take out and come near this high, and then for the course of the month, start making its way towards the big imbalance here. That's a big gap. The equilibrium is right here. Now, think about it. This currency has 2 bank rate decisions this week. Got to be very, very careful. Well, this is because on Wednesday, we got the dollar strength, and then on Thursday, London session, we got Swiss francs policy. Now, Swiss francs is at a very low interest rate out of all the currency. It's at a very low interest rate, other than Japanese yen. Japanese is the lowest. So it finally just came out of your negative interest rate in terms of Swiss francs. And we're going to go from 1 to 1.5. Well, 1.5 is not really a big interest rate. Now, the 50% interest rate change is a huge difference. But I think people are going to want more. And I don't think I would be attractive to know that the interest rate went from 1 to 1.5. I like to see a 1 to 1.75, even 1 to 2 would be even better. Okay. But if Swiss francs, if they come in at 1.25 and they don't think they need to raise interest rate that high, that's going to weaken Swiss francs. I can tell you that right off the bat. If it's a shocker, people coming in expecting 50 basis points, come on, Swiss francs, let's go to 1.5. If it comes in at 1.25 and then come in at 1.5, that's going to weaken the currency, and that dollar Swiss franc is going to shoot up, especially after the dollar strength on Wednesday, right? We'll see what happens with the Fed chair discussion in terms of his outlook for the US dollar. Now, even if Swiss franc does come in at 1.5, is it strong enough? Is it dovish enough to be strong to push dollar yen down? I mean, dollar Swiss francs down. At this point, being this low of the market, look at just from a technical standpoint, aside from the technical, the fundamental reasons of what's going on, and just looking at it technically without understanding if there's going to be FOMC rate decision, if there's going to be, any type of interest rate at all for any of these currencies, just looking at this, what do you guys think? I don't think I have any evidence to short that. I'm looking to long this bad boy. I got a double bottom situation, or the W, and I got a nice equilibrium of the swing high, swing low. I got a nice thick imbalance right there, I would put my money on just dollar Swiss francs going long if I had no fundamental clue of what's going on. But fundamentally, what would need to happen is that we need to have people not happy with the Swiss francs, and the Swiss francs interest rate on the London session would have to be a very dovish, weak, unsatisfactory decision. And the market makers love to use news, right? And so that you can blame and say, oh, that's because of news. Well, no, the market makers didn't move dollar Swiss francs until, first of all, they probably didn't push it down until we may get this on Monday, like I'm saying here. We may get this on Monday, and then Tuesday, and then Wednesday shoot up. And then the Swiss francs might come back and give us a nice little pullback because we may have some imbalances that get created from that push on Wednesday. We might get a little pushback on Wednesday, Thursday, Swiss franc news, and then we may range up here. That might happen because we got two strong currencies that they're both strong. But if Swiss francs is weak, right there, I'm telling you, that's what would happen. So with Swiss francs, it's a tricky week for dollar Swiss francs. A dollar CAD might be a better pair, or all the other dollar classes might be a better pair. Dollar Swiss francs may be a set out week and said, you know what, I'm gonna wait and watch it because it could be too manipulative, especially when you got Swiss francs back to back. Maybe I don't trade Swiss francs until dollar Swiss francs Thursday New York session, because that's the total aftermath after Wednesday FOMC rate decision for the dollar and the Swiss francs London session at 4:30. Maybe it's a better trade after, and I would agree with that. Okay, so with that, I'm bullish for dollar Swiss francs. Okay, dollar yen. Nice, like it. At that breakup structure right there, change of character. We are looking bearish on dollar yen. So we got this nice right there, and then we broke this change structure, and we created a higher lower high, lower low, lower high, and we're looking for a lower low. Okay, so right now we are looking bearish, but we have the FOMC rate decision that could change the course of this pair, right? So right now we are in the order block. So this might be this is the demand zone. This is the demand zone. And for the dollar yen to keep pushing through, the dollar just have to be significantly weak. That's plain and simple, right? However, could we see this? That is possible. I could see that by Wednesday. And then, boom, we're back up here. Okay, that could happen. So with that being said, I am weak on dollar yen to about Wednesday. And then I would expect to see, and we'll take a look at it, right? Our coaching team will meet on Tuesday. We'll see where the dollar yen's at. We'll look at artificial intelligence even as early as tonight, right? To see, are we going to see higher highs or we're going to see lower lows on dollar yen price? Without me looking at the AI report, obviously I don't have access to it until it comes out. Each day it gets refreshed with new data, intermarket correlations from the neural network information with all of the inputs from different of the intermarket correlations. We'll be able to determine with a very high degree, are we going to see lower low prices on dollar yen? And then we can take action to go, yep, I'm thinking we're seeing it. And then, of course, we know FOMC rate decision coming in for the dollar on Wednesday to say, wait, let me pause and see where we're at. If we're in here and we do not take out this low, guess what? Dollar strength, boom. I would be looking to see this, even to come up and take out and see this fair value gap there. So with that being said, I am bullish. I'm bearish to about right here. And then I would like to see us come to this structure here. And I like to see it come up this high. I do think we still may come up here with the dollar yen. equilibrium. I don't know if we're going to come way up here again for the dollar yen in regards to the fair value gap. And this was just historical level for the dollar yen. We may not come up here. The yen currency would just have to be extremely weak, and the dollar would just have to be extremely weak. More about the yen weakness than it is about the dollar strength. We're only looking for about a couple more months. We got March, April, May. That's it. So a couple more months of dollar strength, and then we're going to possibly be at a Fed pivot. And we're going to know more about it after the report from Fed Powell on Wednesday on the outlook. Okay, so short term, dollar yen, I look for more weakness, and then we're going to go possibly long, depending on how the market react to the dollar strength. Okay, let's move on to the other minor crosses now. We're going to go real quick here because these are long-term swing trade setups and some of your favorite pairs. And we'll just take a quick look at some of the currencies here. You can see how we went up on dollar yen. We could not take out this high. We had a change of character here, broke structure, and then we are looking bearish. So yen, euro yen. I am looking for, there you go. Like dollar yen, I'm looking for this. Come back up here. Okay. So I am bearish. This is in a downtrend. Euro yen is in a downtrend. I want to see it come down. It has a reason to come down here, right? And then come back up before we come down. So in other words, overall, this is my outlook for euro yen, right? I want to see an overall downtrend for euro yen. Because right now, we have this downtrend here, then we came up, came down, more downtrend here, then we range, then we broke structure, we're in an uptrend, we could not take out that high, and then we came back down, and we're in the downtrend. So if we do not take out this high, then I expect us to come back up to create a lower high on a higher time frame perspective. Let's go to the weeklies. This is what I'm talking about. All right, this is what I'm looking at. I'm looking for overall market. This is the high. We're in a weekly uptrend. Well, came back down, came this way, came right here, created this lower low, right? We did not stay below that, came back up, but we did not take out this high. But guess what? I'm looking for coming back, breaking or staying below that structure. The structure is the change of character. This is the change of character of euro yen. That needs to tell me we are going lower, okay? Right now, we are bearish on euro yen, okay? I do not see us coming back and taking out that high. This is in that trend line, okay? Just to kind of give you a macro overview on the sentiment for euro yen. So on a dollar, on a close-up perspective, yeah, we're in a downtrend, but I do expect us to pull back to the structure, not take out that structure there, come close to maybe around here, and then let's go dollar yen, lower lows. This is from this swing low here, the swing high. I'm expecting prices to come down way over here. Okay, and then get into this market here before I even consider buying or getting bullish for dollar yen. I mean, euro yen. I keep saying dollar yen, but euro yen. Sorry. Okay, pound yen. Now remember, we got a lot of euro and pound news at the end of the week, so that will set the course of this particular pair. Okay, on the daily, what we're looking at? We're here. We're in an uptrend. Guess what? We're now in a downtrend. So we got this low here that was broken. we came back up, and now we're looking a little bit lower. So this right here is what I am looking for. Nice little pullback. Okay, that's my ultimate line in the sand for now in terms of what we do after that. So I am expecting with this shift in market structure here, right? We have not been able to take this. We've been creating lower highs, lower lows. I expect another lower high and then come back down. So pound yen, we're in a downtrend. Short term this week, we're bearish. Okay, that's pound yen. CAD yen. Nice move on pound CAD yen. We're there. I'm expecting a little bit of more bearishness, right there. Then I would expect to see that. You see it right there. Look at this nice range here, came back, and then we're looking for more bearishness here. We have not been able to take out this high of 100.4 on CAD yen. So CAD yen was been bearish all week, looking really sweet. So I'm looking for a little bit more CAD yen weakness. I like that right there. And then after that, see a little bit more pullback, maybe to just 50%. But other than that, we've definitely broken the structure on a daily time frame. We've broken the structure. We are now, this is the structure I'm talking about right here. We've broken that structure, right? We're in a little bit of a pullback uptrend on a lower time frame. Then we came back down. We're going to create this a little bit lower low here at 94. We're going to pull back, and then eventually I'm looking for the break, and we are going lower, baby. Look at this. Well, I'm going to just go from this swing here. As you can see, we're past the 50% mark, and we're coming down. Okay, this was the swing of August 21. That's when we came downtrend, and then we came up. And then we've been doing higher highs, higher lows ever since then, right? Then we had this historical high in CAD yen, and now we're back down. We did that 50%, and now we're going a little bit lower. We're in the bearish territory, okay? Demand territory. So what I mean by that is that when we get in this area, this is when we're going to look for buys, right? We're going to be looking for possibly that, or we could get lower, right? We could go lower. Nothing wrong with that, but we're in the discount area. That's what I'm saying. We could go this low, and then we'll come back high. So anywhere in this level for CAD yen. Here, you're looking to go long, or here, go long. Either way, anything in this area, this will be our demand zone. Right, anywhere in this area is when I'll be looking to buy. Okay, so CAD yen, looking to do that. Looking for that to play out. Let's go to the next yen pair, odd yen. They're all starting, you see how they're all showing the same pattern for the yen. because that's more yen weakness, right? So I got this coming doing here. We're already basically there. I like to see a little bit of pullback. And then we're coming down, coming lower, baby. Okay. So this is a nice low. We were there, and then we went back up. As long as we stay in that trend, when we don't break that structure, then we are looking good. And this is the trend I'm talking about. As long as we stay this right here. Okay, and we're looking like that. Because we could come back up to this order block or even to this fair value gap over here. Nice little small fair value gap here. There's nothing wrong with coming back up, getting that little fair value gap. And then come back down. All right, so order block. So a little uptrend and then come back down. Other than that, I'm a little bearish on odd yen, but I can see sometime this week to be a little bit of a pullback or a little bit of a smaller time frame reversal to these order blocks on odd yen. So all of these are a little bearish and then come back down. Okay. Little bearish, come back up and then come back down. NCD yen, NCD yen is going to probably be the same as my odd yen. We're already there. I can see it's coming back a little bit down again. Come back up. You guys can see that, right? Got this barrier right here. It will break. There's pressure. There's pressure on yen to break that structure. And once it breaks, it will be going down. We're looking at that as an area, a target, as well as just order block way down here, which is probably the most likelihood of yen coming all the way back down here for New Zealand yen, CAD yen, Swiss francs, odd yen, all coming down to around this area. So again, this is my area of where I would be looking to go bullish. Okay. If you look at the full fractal, going to the weekly. This is the weekly. Now, it doesn't mean it can't come all the way down here. I would be looking, right? Once I get into this area, I'll be looking to go bullish. But if everything's shortened and yen starts to get strong and everything else, then yeah, I'll be looking to short it, right? I'm bearish now. I'm still bearish. I'm looking for lower prices. And then once it gets here, depending on what's going on fundamentally, if yen starts to increase interest rate, obviously that's going to put pressure on yen to start pushing lower prices and yen strength, right? Right now, the yen currency is kind of, kind of neutral, if you will, right? It's been strong, but I think it's going to get weak as well. They're going to have the next interest rate decision on yen, so we'll see as interest rates on yen start to get strong. Ooh, these are going to be lower prices. That's going to slam down. Okay, so look for a little bit of more bearishness on these yen pairs, and then possibly a pullback. Okay, unless they break these structures here. Swiss francs. Oh, man, this was a great pair. Okay, so I hope people shorted it up here. If you did, congratulations. Congratulations. I'm very proud of you. Very proud of you. This was a nice historical trade. We won't be seeing this again. I said that before, right? So we're in a downtrend here, right? We broke this structure here. I can see now more Swiss francs. We got Swiss francs news coming up. So hopefully that would strengthen. Well, we got Swiss francs coming up. To me, if Swiss francs is strong, that means this is going to pull back. So let me go ahead and put it this way. I can see this happening. Get you this little imbalance here, and then come back down. So we may see the pullback on yen. This is going to probably have the biggest fall of them all because of how high Swiss francs went. Okay, so I am expecting probably a little bit of strength in Swiss francs. I can see that happening, taking care of this balance. It's been doing very well in terms of cleaning up a lot of imbalance. I will say that. I will say that. However, we got a nice imbalance sitting way over here, right in this order block. Coming. It's coming. Coming to a chart near you. Trust me. State resilience. Swiss francs, lower prices. Coming. Okay. Swiss francs, bearish, a little bit of bullishness up here. You know, when we swing trade these pairs, you definitely want to dollar cost average these pairs. Scalping these pairs, that's fine, but that's a lot of scalping. That's why you scalp pairs. You don't want to scalp more than 5 or 6 pairs at a time. It's nerve-wracking, right? You put in stop losses. You can die by 1,000 paper cuts. Your accounts can suffer from 1,000 paper cuts from a lot of stop losses because you're hitting stop loss. Versus when you're swing trading these minor pairs, which is what we go over in our coaching students in our advanced course. We teach you how to cost average, pyramid your trades, how to add trade, how to stack trades, how to manage trades, and it can be very, very profitable. And you don't have to be a perfect trader to do that. I do that. I love that strategy. It's very, very relaxing. I love it. Swing trading these pairs and cost averaging these pairs and managing these pairs. It's freaking awesome. As long as you understand the market flows, as long as you understand it, and you have faith and you have trust in your edge. Who said that before? Oh, Mike Douglas. Oh, okay. All right, you're on. Moving on to other. Woo! Look at this one. Did anyone short this one? Did anyone short this one? Look at it. Did anyone get any of that 321 pip? Did anyone? Look, I did not move this. Just did not move. I called this last week. Man, that was freaking awesome. Look at that. Awesome. Guess what? This trade is not over yet. Let me go ahead and there you go. Let me go ahead and do that. Got this swing right here. Yeah. We're coming. Equilibrium coming down. Okay. Nice little pullback. We're going to catch that little value gap, whatever. But your odd is coming down. So if your odd's coming down, that means your yen should be coming down. Your dollar. Ooh. Okay. Yeah, I like that. Sounds good to me. All right, pound odd. How about pound odd? Did anybody short pound odd? It didn't go down as much as your odd. That would have been nice, right? But I tell you what, I take 217 pips still, right? Not bad. So guess what? I got this premium discount area. Trade's not over yet. Yep, we're coming down. Pull back a little bit. And we're dropping, baby. We're dropping. Coming down to equilibrium in this area again. And then we're going to go up. Now, the thing is, here's a question. Are we ever going to break this? Are we ever going to break this and see these beautiful prices once again? Yes, we will. We will. We will. When? When we see euro dollar, pound dollar start to go up. Okay. So to go down, yep, that means euro dollar, pound dollar will most likely go down. Why is that? Because we got the euro and pound that's same as euro odd, pound odd. It's in the same side of the currency. Got it. Okay. All right. Euro odd. I'm bearish. Little bit pullback. Let's go. Got more to go on that trade for sure. Okay. Euro CAD. Let me see. I had this market last week and we came back down. That was a nice little trade. That was about 265 pips. Hope you caught that. It came back up a little bit. Guess what? I'm looking to take this back down. Let's go. Let's go. Equilibrium's down here. So this is what I'm looking for. Come down all the way into this area. Wow, that means CAD would have to be strong. Yep. So I am looking for CAD to be stronger than euro. Okay, that's all it needs. This is not anything we do with dollar. This is between euro and CAD. Dollar is out of this fight. This ain't got nothing to do with dollar. This is between euro and CAD. And right now, euro dollar, euro yen, euro odd. Oh, yeah, this can happen. Equilibrium right here. Just look, anything in this area, are you looking to buy? No, we're in premium, baby. This is short. This is supply zone. Okay, we're looking to short that. Let's go to pound CAD. Look at that. We haven't taken this high. We came back this high. This high didn't take out this high. This high didn't take out this high. We're still in this trend line here. Guess what? We're coming down. We're going to come down here. We're going to come back up here. This is what I'm looking at. And then we'll go up to these prices up here. All right, we're going to come up here, but it's not going to come up here because it hadn't taken out that high. It didn't do it there. This one didn't do it. This one definitely hadn't. It took out this high, kind of do an equal high, but it's not going to take out this high. If we're expecting pound odd to go down, we're expecting pound dollar to come down. Pound CAD, yep, that means CAD strength. Equilibrium down here. Technically, this is what's showing me. All right, pound CAD, I'm weak. Bearish. Euro, New Zealand. What is going on with Euro, New Zealand? Well, let's take a look. That was a nice downtrend. Broker structure. Nice range. Broker structure. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Oh, smack. We came down. We have, this was the, looks like the daily time frame. Let's look at the daily time frame. All right, daily time frame says this is kind of a lower high, lower. This is kind of a change of territory right there, but I kind of like this one better. This is kind of a strong area for me on a higher time frame. This is what I'm talking about right here. For me to say we're bearish, but to be better, let's look at a 4-hour time frame. Let's get really deep into the details of this fractal. Let's get really deep into this detail. All right, you can see it right there. Okay, we got that double bottom. right? Created that double bottom. Then we came back up here, range, came back up, broke that structure, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. There you go, right there. That's what I'm looking for. Where is the lower high before it was created that high? What is responsible for this high? What lower high order block is responsible for this high? You got this little wick here, but I like this evidence more right there, right? To me, this candle is responsible, but I don't like this one. This is weak. This is the high. This is that structure right here. This is the change of character. Did we break it? Yes. Did we stay below it? Yes. So are we in an uptrend? No. We're in a downtrend? Yes. Yeah, that's pretty good. Who taught you that? Right? It's just market structure. That's what it is, right? So we got this change of character, lower lows. Let's go here. We got lower lows, lower highs, lower lows. Okay. Going to this order block. Maybe. I think this is what we're doing. Your NCD coming down here, baby. This is what I'm looking at. Nice. Right there. Okay. Now, there is a low probability we may see this area. To me, that's a very low probability. I want to see this first. Let's get into this area first. Now, the strong zone is right as you right here. This is the strongest zone right here. But we would have to break this. We'll get into this area. So this is going to be some couple of months fight down. Okay. So your NCD, more just kind of just taking advantage of that euro weakness. That is, to me, expected to come. Okay. Now we have this pound yen. Pound yen came up here February 23rd, came back down, came back up. What's going on here? It came back up here March 23rd, didn't take out that high. I mean, March 10th, then March 13th daily candle, couldn't take out that high. Came back down, it looked like it was looking bearish, and then it came back up and tried to do it one more time on March 16th, couldn't take out that high. What's going on? Oh, wait, hold on. This looked like we're gonna have a shift in market structure. Okay, so with that being said, what we just had your NCD. I'm sorry. Yeah, we just had your NCD looking bearish. Now we got pound NCD. Look at that 4-hour time frame. Let's look a little bit lower. Did we get a break of structure yet? Oh, not yet. Not yet. This is it right there. Reason why right there is because we've had some strong highs, lower highs. Didn't take out that high. We retested that lower high. Didn't take out that high. Came back and retested that lower high. This is a very strong support level versus this, right? That's a little bit different than your NCD versus pound NCD. Okay. So this right here is that line in the sand for us in terms of change of character. So it's bearish, it's looking bearish, but has not been confirmed that says, hey, oh yeah, we're going down, right? We are looking bearish. So with that being said, I am looking for sell. So I'm going to say I'm bearish, looking for something like this. Okay. And then we may range here for a little bit. So pound NCD coming down. I'm bearish. All right, pound and ski, cat switch French. Take a look at this real quick. How's this looking? Um, please tell me someone bought that. Oh my gosh, look at this move. 177 pip. Wait, let me just show you. This is real quick. This is what I was calling. I was saying, hey, this is we're looking bullish, right? And I had called this earlier. I said, man, this is looking great. We are going to be, looking to go here. And I was thinking, hey, this is how clean I would like it to go, right? Got all this imbalances here, and that's what I'm looking at. And I was still bullish bias, right? Why is that? Let me look at the weekly. I'm gonna show you. This is the price for CAD Swiss French. Historical price. Let me see if I can get maybe more of a historical price. I'm going to the monthly. Let me go to the monthly. You guys tell me. This is back in 1982. Wow, price back in 1982. It's like right when computers was invented and internet wasn't even available yet to the general public. 82, it wasn't. Computer was invented, but internet wasn't widely available to the public until about 1990, 91-ish. This is the ceiling for CAD Swiss French. This is the floor on a monthly from 1982 to 2023. Look at this. Should we short this darn thing right now? Right here. Short it lower. To where? Where you're shorting it to? Since 1982. What reference point do you have? I don't see anything below the damn floor. So nothing's telling me that we should just keep going lower and lower and lower. Okay. Now these reference points right here, it broke lower. Right, because this was new. This was obviously we didn't see any prices here below that. And then we saw this peak right here. So when we had this peak, price came back up. So that was a reference point for lower prices if they wanted to go, and it did. Well, it created this peak in 2014. Now, when the last time it created a peak like this, look at this is when a market is in a downtrend for annual years. Now look at this. You can see that there was no reference point here. There was no reference point, right? Just think about it that way. There was no reference point for lower prices. And you're like, okay, where's price going to go? I mean, when it comes here, we're looking for price to go higher, right? Well, what happened was at that time, we did get a reference point and it did this. Whoa, boom. So when it did that, it created that low there. Okay. It created that low, and that was a reference point. And I want to break this down because I want you to think as we're in that situation now. This is very, very important. Watch this, very, very important. Watch this. So when that happens, what do we have? This swing high. And this swing low. Is that a 90-degree drop between 90 and 50% drop? Just a 90-degree drop between 90 and 70 degrees. That's vertical, and that's 70. So what do we got? A 50% snapback situation? Come on, Leonard, that doesn't happen all the time, right? So that means the 50% from that swing low, that swing high, is literally right here. How many traders would think to go long there? No one, less than 5%, unless you are us, right? But we cost average it, right? Because obviously, think about it. We're here, here, and here, and here. We're longing right there. What? Yeah, we're longing it right there. That's what historical says. Yeah, but it's going to hit your stop loss. That's not how we're trading it. We're going to cost average this thing. If it goes lower, we'll buy another one. If it goes lower, we'll buy another one. Whoa. Why would you buy? Because we have no reference point that tells us we're going to go lower. We have none. And if it does, we have a higher chances of it going back up on a buy because of no historical low prices. But when you get this, oh, that's 50%, baby, right away. And did we get 50%? Did we get 50%? Right here. Did price come back and bounce 50%? Yes, it did. And that was all money. Okay. Now, history kind of repeats itself now. Look at that. We have a reference point of a new low. Price could come that low, right? Now, once price comes that low, what are we looking at doing? Historical low. We're looking at buying, right? We're going to look at buying. So when it got that low, I was calling buys all in there. So that means anytime price got into, we're in that range, right? We're in that range. So anytime price got into here, we're buying, 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 except TP, TP, TP. So every time it dips, we bought, cover, exit, bought, exit, cover, bought, exit, cover. And then it came down, bought, boom, TP. You get that? I'm taking a little extra time here before we close out the call. That was TP, that was TP, that was TP, that was TP. How many times you made money on that? Okay. Now, price did this. And this will scare people because they don't understand. We got that low right here. And then all of a sudden, while we were shorting it, all here, we got this low, right? I was calling buys here, buy, 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 and then we got this low. Well, when it got this low, I'm telling you, I can't buy fast enough. That move right there from this low was a nice 187 pip, 188 pip move. Wait, is that a 50% move? You tell me. anytime we get a 90-degree to a 70-degree move, like we just got on this candle, this candle, this candle, we get that 50% snapback. So now we reload and we're looking to continuously take this back up, okay? So I'm still looking for this pair to go long, right? The trade's not over yet. Cash Swiss French, just want to take a little extra time. So cash Swiss French, right here, still looking to take this to at least 50% for this imbalance, this order block, okay? So cash Swiss French, I'm bullish. Euro pound, lower prices, baby. Let's go. Right there. Might see a little bit of a pullback. That's fine. Then we'll come back down. We got this big discount imbalance still staring in the face. We couldn't take out this high. That high couldn't do it. This high couldn't do it. We got that change of character sitting right there. Okay, Euro pound, I'm bearish. Plain and simple. I'm not looking for anything else to do on Euro pound other than short that. So I do expect pound, which is coming up. Wait decision. What do you think this would do to this particular pair? Do you think that is coming on Thursday? That is a great probability. $133 pip, that's going to pay you out like a 300 pip because this is the most expensive pair in the market right now. Okay, let's go touch on the other pairs real quick, just to kind of give you a quick overview. Pound Swiss French, this is looking awful. And even though I was right on the call for pound Swiss French, guess what? We're coming back. I'm going to call this short. Okay, but this is going to be a range in pairs. It's going to go like this. It's going to go Swiss French, boom, and then it's going to go right back up like this. Because we got both pound and Swiss French, both of them. Yep, just like dollar Swiss French, both having a rate decision. Other than that, I would stay out of this pair this week. Oh, that's awful. Okay, dollar CAD. All right, dollar CAD. Odd CAD. Sorry, not dollar CAD. We did get to equilibrium. Nice. So what's expected now? I'm still bearish on odd CAD. This is the break of structure here, though. All right, we get that break of structure, then we're going up. But that break of structure needs to happen on odd CAD about 0.9209. All right, we're right there now. We're right at there. So I would look for a rejection, and then I would look to short this. Okay. However, it is an uptrend, but it is short-term bullish, but it needs to break this structure. So in other words, I would wait to see what my next daily candle does. Does the next daily candle reject it? If it does, then I can short it. If it breaks through, then I'll be looking for another smaller time confirmation to buy this. But right now, I don't think it's yet there. I want this break below. I want to get into the demand area. And the reason why, because I got a lot of imbalance down here for you. A lot of trade. Come down here, get these trades, and then I'll buy you. Okay, NCD CAD. Same difference. We got a nice little uptrend there, right? It did do a little bit of a break of structure. We are coming back to this nice little order block right there. Let me go ahead and mark that up. and we're there. So other than that, I am bearish. I would be looking to be bearish once I see the next two candlesticks. I need to see the next two daily candlesticks. I wouldn't take a trade yet to go short until I see what happens on the next two candlesticks at this order block location, because I want to short it all the way down into my discount zone. Right now, this is all bullish. I would not look to buy, even though if you want to scalp, it'd be a little bit different story. Odds switch French. Oh, same difference. Look, I call this up here. I call this down here. This has been a nice trade. That's 204 pips. Hope someone caught that. I am bullish. We are going to see this. This is what I'm looking to do, right? Now, what's funny is that odds switch French is down here. So if odds switch French is all the way down here, we got the interest rate for odds switch French. Should I push that lower? Well, it's already low. So this is telling me that we could expect to see switch French be weak. We got some nice imbalance. So technically, I can't see prices coming down here again, other than just me maybe a lower low, just kind of not lower low, but maybe an equal low. Other than that, I'm still long term. I'm bullish. Same thing with NCD's Chris Frank. Look at this move. That was a nice move. 187 pip move. All of this happened this week. So a nice little pullback. And I want to see this come back up. Now, of course, we got lower lows, lower highs, lower low, just below lower high. That means I would need to see the next 1 or 2 days candle and possibly wait until after switch French news to see which way this is going to go. Okay, because of the switch French news this week. Odd NCD, if you trade odd NCD, that's great. I would be looking to go long. And US Swiss French, which I don't trade at all. I would be looking for this to go. Dude, here we go with Swiss French again. All right, it's already a low. I don't see anything else. Is this a historical low? Oh my gosh, it is. Look. Oh yeah, US Swiss French, we're at a low. Okay, let's go ahead and short the lows, guys. Go ahead and put all your money short it. What? No. Right? What is US Swiss French going to do? Go lower? It could. It can go this low, but I don't think it's going to go any lower than that. It's a very strong order block. There is some fair value gap there. I can't agree with that. There is some fair value gap. But other than that, I'm looking to, I would say, higher prices. Okay. This low for US Swiss French, for those who like to trade US Swiss French, it's not, it's pretty much held, right? A lot of liquidity grab there. I'm looking to see this go longer. That's where I'm at. Okay, so with that being said, all right, my friends, I hope that was helpful. That was very long. There was some very good coaching tips in there, some golden tips, some very good lessons in there. I hope you guys learned a lot. It's a very long lesson, a very long overview, but I hope this helped you. And coaching students will be at it live Tuesday, Wednesday, and Thursday night. Other than that, I'm going to go ahead and end this call. It was very long, but at the same time, it's very, very thorough. Okay, for the top down, all thorough review. Okay, get volatility this week, guys. I'll see you guys later on this week. Coaching student. Okay, bye-bye.